Welcome back. You're still tuned into the Power Station Energy 100 with myself, Elsabe, and we are talking to Mr. Daniel Steinman on EconoChat. Let's talk business with Mr. Daniel Steinman. In case you've missed out on previous conversations, you can, of course, go to economist.com.na and find us there and listen to the very much important conversations that we've had on the economy and so much more. Today we are talking economic growth, and we've spoken about retail, how retail impacted the economy for it to grow to where we are now at 5.3% in the first quarter of 2022. So, Mr. Daniel Steinman, you said we will be talking about mining.
Mining, yes. Mining was the biggest contributor.
Yeah.
Not retail, but retail was a substantial contributor.
Okay.
So it was basically the lion's share of the 5.3% growth in the first quarter came from mining and retail. And retail, I've explained, it was because people couldn't buy for 2 years, then they suddenly started buying.
Yeah.
Mining is a bit of a different case.
Okay.
I'm sure you've read articles or reports about what they call the distribution chain interruptions, that a large part of the inflation that we are currently seeing is because goods are not flowing from where they are manufactured, mostly in China, but also the rest of Asia, to where the markets are, Europe and America, and then the rest of the world completes the market. Incidentally, did you know that tiny little place on the globe, Europe, consumes 1/3 of everything, and that big place on the globe, America, consumes 1/3 of everything.
Okay.
And the whole rest of the world put together has to be happy with consuming the other third.
The rest of
That's a scary statistic. Europe 1/3, America 1/3, whole rest of the world 1/3. So what happened is in COVID, because of lockdowns, demand was severely reduced.
Yeah.
So there were too many ships and too many cargo planes and too many trains and too many of everything that carted goods around, products. So they simply stopped that. So in 2022, when we came to the end of COVID, we suddenly, and this is the whole argument that I conveyed in the first part of our conversation about retail, suddenly people wanted to buy again. So the retail statistics confirmed that to us. But now we have boarded so many trains and we have parked so many ships in the harbor and we have grounded so many cargo planes. So it means that those distribution chains that were functioning normally or were in existence before COVID, they were impaired. So the goods couldn't get to the market. And what happens when stuff gets scarce? The price goes up. That is a very fundamental economic, almost a formula I want to call it, you know. It's called demand elasticity, but don't let me scare you. So what happened is that now suddenly there's this big demand. Same here in Namibia. I mean, our figures show it. There's too few ships and too few aeroplanes and too few trains and too few trucks to take everything where it is needed. And you see the prices start rising, and you see that there are shortages of a lot of things in many places. Now we get to mining. Mining produces commodities. Mining is what we call a primary sector. It's like agriculture. You dig in the ground, you take something out, you process it. What do you get? You get iron, you get lead, you get copper. But in the case of Namibia, what is the one commodity that we produce that's got the highest value? Diamonds. And what happened in COVID? People couldn't buy diamonds. And what happened after COVID? And many people postponed their getting married, for instance. And diamonds and getting married they go hand in hand.
Definitely.
And jewelry. So suddenly there's this big increased demand for diamonds. And that is why the mining sector as a whole contributed so much to the growth that we saw in the beginning of the year. It is because the distribution channels of the diamond jewelry side, the jewelry industry has started flowing again.
Okay. All right. And with that said, we definitely got the answer to why the economy has grown to a 5.3% in the first quarter. And when we come back, we will definitely talk more just to conclude, elaborate on economic growth.